Joining us is Jasper Ondap, equity analyst at Regina Capital Development Corporation. Good to have you back on, Jasper. Welcome to the program.
Hello, good morning, Kathy. Thank you so much for having me today.
All right, I would have thought the index would have fallen as the pesos reached a fresh all-time low, but it didn't. It's holding up.
Yeah, so I guess, what will happen since Friday, we've seen really the drop quite drastically, about 1%, and then the next day fall comes another 1%. And Tuesday, we're just saying this bargain hunting at this point. But, as USD PHP close above 59, now doing, as you have said already, fresh lows at 59.15. So what really happens is it's more of a bargain hunting, or it's just really a technical rebound at this point, right? Because falling from from 6,1, 6,000, consolidating now again at 5,9, and then consolidating again. Because what happens to the market, it drastically falls down, but bargain hunting only gives us like 10 points above. So it doesn't really go up as much, or a technical rebound doesn't really retest back to those levels at 6,000. And what
So,
really happens
what are you then trying to say, Jasper, that the bargain hunting is short-lived and eventually the PSCI will follow where the peso goes?
well, with the USDP, with the currency, what happens really why the market falls is really because we've already noticed this from a few days from now, last few days, last few weeks, even year to date, we've seen really the foreign are already net selling at this point. So what happens is when, just say for example, I'm a foreign investor, I have a USD, and then I invest across the board in the Philippine index at, say the currency was at 55, 56, 57. And then, as the market performance today, it's down more than 6% year to date. So you already lose capital appreciation. And now with the peso reaching at 59, you're also losing at your forex. So there's a little to no upside anymore as you invest in the market. So the foreign continues to sell day by day. And then, the bargain hunting cannot absorb as much as this is what's happening. So that's
Exactly.
really yeah, so it's not as much, when bargain thing happen again, it's only like a 10 points, 20 points increase. But with the foreign sales, as much on the board, it's going down 1%, going 80
Well,
points
something
down,
big
60
is
points
going to
down.
happen in the next 48 hours, and that's the Federal Open Market Committee, the Fed, deciding in 48 hours. Could that change the flow of the peso, the direction of the peso, and the interest that people have? Given that we're also going to have to think about the interest rate differentials.
Yeah, so, currently, I guess everyone's already pricing in this Fed cut. I guess CME Watch already pricing in a 99.9% of Fed cut by, I believe, later 2 a.m. But what happens is, with the Fed cut happening, then the USD falls down, and maybe a consolidation or support will happen for the USD PHP. Maybe it falls down back to 58 level. But we will have to see what happens next in the first next few months when BSP may be cut, and then hypothetically, let's just say when the Fed cuts and then the currency supports at level above higher 58 levels. But if the Fed cuts and it sustains at 59 levels, it would be worrisome for the BSP. If it cuts more in December, it might go hypothetical to 60 per year end if it happens.
And if that happens, because further rate cuts would mean further pressure on the peso, might that constrain the Banco Central from cutting then in December, even as the Fed cuts rates in 24 hours?
Yeah, certainly. Currently the interest differential is about 50 points to 75 points, and if they cut the 75 points, and uh, if the BSP cuts by December, that's going to stay flat at 50 points. But then again, if the currency continues to depreciate, even if the Fed cuts, putting, say, the peso by, let's just say, December or last few weeks of November at around 59 level, it would be worrisome if they would cut, leaving that a little room for the BSP to cut further. Because if it reaches 60 levels, then, fluctuations or outflows of USD across the market might just
Right.
happen.
Well, looking at banks right now as a barometer of the Philippine economy, as you know, Nomura's already cut its GDP forecast for the year, but the rating agencies are still standing pat. How are you assessing the bank earnings so far and what they say about the economy? We've heard from BDO, BPI, Union Bank, among others. How are they doing in terms of net interest margins as interest rates come off some more, and the NPLs as the infra spending slows because of the corruption allegations and investigations?
Well, certainly, the the top banks, the big banks, relatively doing okay still. Inline earnings, well, little over than 5% or low single digits. It's quite in line. But, the lower, or say, banks that outside the top three are gaining more than 20% or higher double-digit growth. And as a barometer, really, we've just seen across the banking sectors, really, is the consumer loan growth. It comes with coming from the rate cuts, even though that the net interest margins is quite still in line despite the rate cuts, though, the margins are getting lower just because of the rate cuts, but it's partially offset with the loan growth coming from the consumer loans. So, um, I think it's quite effective what the BSP has done. It's currently consumer loans now getting higher. Everyone loves to spend, getting assets or items at a lower interest rate than used to before. So currently, it's really like doing well, but we will have to see what happens with the GDP when the third quarter GDP comes out. If it really comes low, higher than expected, then BSP might have to do something when it comes to their meeting
Yeah.
coming
All
later
eyes
this
now
year.
on that November 7th GDP report. Thank you so
Yeah.
much for your insights. Jasper Ondap of Regina Capital Development Corporation.